Welcome back to the channel. Today we are going to be discussing what my thoughts are on altcoins and the term alt season. After FOMC, the markets have rebounded slightly, but what is in store for us in February? Are we going to get a big altcoin run? Which sectors are going to outperform? That's what we're going to discuss today to help you position for the next month or so in crypto. I only took a couple of days off making videos because I was moving apartments. That's why I've got this brand new setup and background. Let me know what you think in the comments below. I think it's an improvement from the old setup, but in those 2 days, so much has happened. Obviously, I've been keeping you guys up to date on Discord, but I haven't been here on YouTube, so we have a lot to cover because we've had FOMC, we've had some crazy trades that came out of that I personally took. I want to update you on my positioning. We've had a lot of dialogue on X about whether there'll ever be an altcoin season, so I do want to dispel some of the theories going around, and I also want to put my own twist on it and tell you some of the metrics that I'm looking at in terms of how I'm quantifying this next little period in crypto. I've made a few changes to my portfolio as well, which I want to update you on. So got a lot to update you on here. We're back to daily uploads now. So to make sure you don't miss a single upload, make sure you click that post notification bell down below and make sure you are subscribed because I'm going to be coming with the alpha over this next little period. There's a lot I've got planned over the next couple of weeks, both on the X side, the Discord and Telegram side, and of course here on the channel. But before we get into all of that sort of content that's going to be coming out over the next couple of weeks, on-chain guides, strategies, portfolios, etc., we need to do a market update. It's been a few days and there is a lot to discuss. So today we're going to hammer through everything that matters right now heading into February. So firstly, I want to start with the Bitcoin chart. Obviously, it was a little bit of a nasty fake out to the 96K zone pre-FOMC, but we did bounce really strongly after Jerome, I wouldn't say came out and was dovish, but certainly had some positive lines in the press conference, which got the market excited. He didn't come out massively hawkish, which was one of the fears in the market and resulted in that pre-FOMC sell-off that some people were anticipating. Of course, rates remain the same, but we knew that was going to happen. It was all about the press conference, and I think we get a pass mark. The interesting thing is, from a macro point of view, we don't have another FOMC until March. So the markets are going to be driven by other factors, I think, over this next month. Of course, there's always macro data, but I think there will be a focus once again on what Trump does in terms of executive orders. There'll also be, I think, a major focus on the tech and AI sectors, which we'll get into later today, which are evolving really, really rapidly. I think some of the developments that are happening in AI are really tangibly impacting markets, specifically the NASDAQ. But the pre-FOMC sell-off ended up being just that, a sell-off. And I actually tweeted this a few days ago, and I mentioned it on the show as well. I said, if stocks are already in panic mode, is Jerome Powell really going to go out super hawkish and crush the markets right as Trump has entered office? I don't know. Might need to come out and soften things a bit. My prediction is that the pre-FOMC sell-off marks the local bottom. And of course, this tweet was during max FUD, max panic. Altcoins hit their local lows the day before FOMC. And whilst everyone else was panicking, I actually thought that was a local bottom. That's why I did this tweet and this post in Discord here, that this was actually the first time that I was adding majorly to my position since the big sell-off in December. So as you can see here, some of the coins I'm looking to add on the dip, my safe plays, my AI plays, my RWA plays. I seriously haven't bought anything with size since the big December dip. I literally only buy during moments like this, so peak fear. One of the approaches I'm taking is a 48-hour TWAP, so time-weighted price average DCA, into altcoins pre-FOMC. And of course, a lot of those positions are now up quite nicely. Just going through some of the ones that I did add here, we have Jupiter, which responded nicely. I managed to get in at around 95 cents on the sell-off. It went up to 120. It started to retrace a little bit since then, but that was a very strong bouncer. We can also see assets like Hyperliquid. We got into at $22. That bounced to 26. Checks went from 40 cents back to 55 cents yesterday. coins are cooling off a little bit now, but there were some big gainers yesterday in the market, and especially from those pre-FOMC dip buys. I think we navigated that really well. Now, my general rule with buying spot in crypto is only buy on major fear events. And honestly, those major fear events typically only come like once a month or once every couple of months. So although I'm always buying and always trading and repositioning, big positional trades or buys I like to do during peak fear. And that's one of the reasons why I ended up making these moves a couple of days ago pre-FOMC. I think we can actually learn a lot about the market based on the coins that actually bounced the strongest out of this dip. The coins that rebounded strongly, these are likely going to be the coins that have the mind share and the attention of the market over this next little period. Relative strength in the market is very important to pay attention to, especially when it comes to trading. So if you do look at the daily performers in the market, you do have some of the AI coins performing. Notably, RWA is doing really well. So you can see Mantra here, Arweave, ENA, Hype. There's a reason why a lot of these coins are actually mentioned in that DCA list, because these are the coins that I thought would bounce the strongest. And that was just based on the fact that prior to the dip, they were exhibiting relative strength, and we have seen that again. The only outlier here is Pepe, which isn't exhibiting relative strength, but I still want to hold a Pepe position because it's my favorite meme coin. But looking at the weekly as well, this also paints a picture. You've got Mantra once again performing really strongly. A lot of the RWA coins have done really well. Ondo, Checks yesterday was up like 40%, which was insane. Clearpool also had a decent bounce yesterday. So a lot of these coins were up. Tau was also up 17%. I want to speak about that later in today's video because I think what happened with DeepSeek is changing the AI landscape a little bit. So I want to give you some updates on some of my AI agent positions, how I'm approaching the AI agent market and the AI market in general. That's going to be the last section in this video, which I think is valuable. But overall, there is a clear picture right now as to the strongest performers in the market. RWA, select AI coins, and utility coins. I really think we are in a bit of a utility bull run in the sense that what Trump's done is he's opened up the regulatory pathways in the US and the landscape to actually enable a lot of big fund managers, investment managers, funds that were previously skeptical of crypto to enter the market. And you have to ask yourself, like, if you're a big fund manager and you've been avoiding crypto due to Gensler, and now you're open to the idea because it's becoming more institutionalized, like, what are you going to bid? Obviously, the first one is Bitcoin. That's the clear beneficiary. But after that, I think the utility projects, especially real-world asset projects, appeal to this contingent of the market. So real-world assets, that it's easier to understand. It's tangible versus something a little more intangible, like a meme coin, for example. Now, memes will have their time and place. Meme coins will always be around. Cult coins will always be around in certain shapes and forms and in certain rotations. However, I do think we are in a utility bull run now, which means there are select coins, we'll speak about a few later today, which are going to outperform because these are the coins that have the strongest narrative right now with the regulatory shift that is happening in the US. So that's clearly where a lot of my focus has been in terms of deploying new capital and in terms of where I'm consolidating my portfolio. And it's no surprise that some of these assets are already cropping up on the bubbles chart here when you do look at some of the performers over the last 24 hours and over the last week. But what now in the market? So we've played the last few days okay, at least from those Discord buys, but what now? What am I doing? Well, the first thing I did was I shifted a little bit of those profits back into stables, not all of them, because a lot of those entries I think will be decent high time frame entries, especially, you know, coins like Checks, Jupiter. Like, I'm happy to just keep holding them because I think they still have more upside. Hyperliquid, Solana, but some of the more speculative stuff that I added, I'm just collecting a little bit of profits on to make sure I'm sitting at a nice stable balance. I said this in the Discord this morning because someone asked me, but my stablecoin balance right now is sitting around 35%. My aim is over the next couple of weeks to bring that to 40%. I actually did a video and a Twitter post about this at the start of December, which basically outlined my stablecoin plan to go from 20% stables to 50% stables by April 2024. And I'm pretty much sticking to that plan. Every time we get a major pump, I'm taking money off back into stables. Every time we get a lot of fear like we did a couple of days ago, I'm re-adding to my spot positions. And gradually over time, I'm just building up that stable base. I always think it's wise in crypto to keep moonbags. I don't think selling the entirety of a position is the right strategy because at some point the market could go parabolic and you always want some exposure. Mantra is a good example of this, right? Like I first called Mantra on the channel at like 40 cents, I believe, or 50 cents, and now it's over $5. Keeping a little bit of a moonbag in a position like that, even if you're averaging out over time, means you're still able to expose yourself to profits. Now, I personally rotated most of my bag into assets like Checks and Clearpool, which have performed on par. Checks has actually outperformed Mantra since I made that swap. But the logic, I think, really applies of you can ladder out of a coin over time, but keep a moonbag just in case it keeps going higher and higher and higher to protect yourself. So that's my strategy. I've gone slightly heavier into stables. Later, I'll talk about how I'm managing my investment portfolio versus my trading portfolio. But that's pretty much in line. Nothing's changed. The tweet's public. I had that DCA plan from December 3rd. I just got the tweet up in front of you. You can see this was my plan. I am slightly accelerating it though. I'm going to target probably 35 to 40% by end of Feb because I also think the market has accelerated. Now, that is not me getting bearish. I'll discuss later why I'm doing that. The TLDR is I'm moving more towards narrative trading versus long-term investing because as the cycle progresses, as you reach the peak of a cycle, you want to gradually change how you approach the market because you don't want to be continuously adding to your long-term spot positions as some of those trades hit their expiry date or approach it. So you do want to start shifting the way you think about trading, and that has always been my plan since the start of December. I've just maybe accelerated it a little bit to fit the needs of the market, but we will chat about that a little bit more later. Of course, I'm also going to answer the question of when alt season. I think that is a question a lot of people are wondering, or when or if alt season. And there is some data I want to run through today about what I think could happen. But in terms of the market now, the first thing I want to look at is total 3 because I want to make this point. The state of the total 3 chart, which is the altcoin index excluding Bitcoin, Ethereum, and XRP, is significantly more bullish than if you scroll on X that the general contingent of the market would have you believe. Now, I understand most people have underperformed this chart because a lot of people are progressively moving into riskier assets versus the safer assets in the market. So I understand why it's the case, but from an altcoin point of view, this chart actually looks quite good. There are no real red flags. I mean, the other day, we obviously had our retest of this support level that freaked a lot of people out. But in reality, it was just that, a retest. And we've already made up most of that move again. So looking at total 3, this actually looks like quite a bullish chart. On the weekly, it almost looks like a bull flag is starting to form. And if we do get a breakout to the upside, alts are going to perform really well in that environment. Now, obviously, the market's different to last cycle. We're going to discuss that today. So not every altcoin is going to pump. That's where the word alt season is a little bit different this time around. But there are going to be assets which perform really, really well if that happens. We're already seeing some assets perform really, really well even right now. You know, RWA assets, select AI coins, all performing super strongly. So it just shows you if you're in the right assets, there's still a lot of money to be made in this space. And overall, when I look at total 3, I'm really not freaking out here. We'll dive into the nitty gritty in terms of altcoins a little bit later, but I think the primary reason why there has been so much speculation and just so much discourse on X about where we are in the altcoin market is because I think this cycle more than any, people aren't really holding majors as much. I feel like not many people are holding Bitcoin, Ethereum, or Sol. Maybe Solana's a slight exception, but most people I think are holding like on-chain stuff, riskier stuff, a lot of meme coins. And for that reason, I think the sentiment is slightly detached from what the charts say. Because if you look at the Bitcoin chart, it's ridiculously bullish. To me, this chart still looks like it wants 120 to 140K, which obviously will be good for alts, but that's what it looks like right now. Obviously, that can change if we start breaking down, but we can only go off the current data, and that is what the data is showing. The trend is very strong. The total 3 trend as well, the altcoin trend is also very strong, but there is a disconnect because the market, I guess, isn't really holding the assets that are performing. Now, there'll be some of you that are killing it and have outperformed because you've been able to catch the rotations. There'll be some of you that are also doing really well because you're more risk off and maybe you're just sitting in a few high conviction assets. But there would also be a lot of you that are underperforming. And I do sympathize because this cycle has been a lot more difficult. Like it fundamentally has been very, very challenging. I want to, in a few minutes here, give you a bit of a guide to help you trading on chain. But it has been a weird cycle because a lot of the gains have been on chain, but also most of the losses have been on-chain. So if you've been able to play the on-chain game correctly, there's been so much money through AI coins, memes, things that reprice really quickly, but that game has become more PvP and more violent than ever. So although it's easier than ever to make money in a way playing on-chain, it's also become infinitely harder to keep those gains because of how PvP it's become. And a lot of the gains on the centralized exchanges have also been muted. A lot of the new listings on Binance have been going down because there's so much altcoin dilution and so many new coins coming into the market, which is fragmenting attention. So I totally get why people have been struggling this cycle. And even my own portfolio, I haven't been perfect. I mean, I've made money, but there's definitely been times where I could have made a lot more money because this cycle has really punished complacency more than any other cycle. Yes, it's given us gains, but if you are complacent and you don't lock in those gains as soon as you get them or very quickly, the market has really punished you very, very quickly. That's primarily because A, a lot of the coins on chain don't have a lot of liquidity, and B, the reason for less liquidity on chain is because there's so much dispersion. So liquidity is now dispersed amongst thousands or millions of altcoins, really, as opposed to last cycle where it's like a few altcoins where most of the liquidity is concentrated and most of that's on-chain. Pump fun has completely changed the dynamics of crypto. Last cycle, you got to remember in 2021, there was no pump fun. There was no Bitcoin ETF. So comparing this cycle to last cycle, it's kind of a fool's game because the dynamics are completely different. You have Bitcoin receiving a passive institutional bid like never seen before, and then you have altcoins releasing at a pace that we've never seen before. So the narratives are completely misaligned. So to expect that up-only altcoin-esque season of 2021 is a little bit of a fool's game. Now, there's still a lot of money, and there's still, in my opinion, is going to be an alt season at some point, but it depends on your definition of alt season, because if your definition is everything's going to go up at once, that's never happening again. But if your definition is pockets of extreme outperformance where you can make a lot of money on altcoins, that is going to happen again, and we'll get through that framework in a few minutes here. But let's go back a step because I'm jumping the gun a little bit. Firstly, before we can talk about when alt season, we have to look at what the trigger for alt season is. Now, historically, the trigger has been Ethereum. So in the past, Ethereum has led pretty much every single alt season, but looking at ETH BTC right now, it looks quite bearish. It's actually been bleeding against Bitcoin. Now, I actually did a report a couple of months ago, or about a month ago, where I went through all the data and I made a Python script to work out what the trigger for alt season has been. And I came to the conclusion that in the past, alt season has been triggered by Ethereum outperformance. Now, obviously, it's a limited sample size, but the wealth effect from Ethereum going up is what drove a lot of altcoins higher last cycle. So altcoins proxied by Ethereum also exhibit statistically significant and predictably recurring seasonal trends on both absolute and relative bases. The season termed alt season begins in January and ends in May. It's the epitome of the January sell in May and go away effect. I still think sell in May and go away is going to be intact this cycle, but I do think we could have a run later in the year that is likely going to be fueled by Bitcoin. But in terms of altcoins, is Ethereum going to be the trigger? Well, I think Ethereum does turn around, but I don't think it's going to be the trigger. So if you do look at monthly returns for Ethereum, in post-halving years, which we're currently in, which are typically the most bullish years in crypto, it has performed really, really well. It had a 78% run in January into 8% in February. In 2017, it had a 31% run into a 48% run in February. Even last February, it was green. So out of all the Februaries, it's only had one red Feb. All the seasonal signs are pointing towards a strong February for Ethereum. But at the same time, Ethereum has the most competition it's ever had from other chains like Solana and Sui, which are gaining real adoption, the most FUD it's probably ever had, which although create like a good environment to buy the asset, if your goal is to buy peak fear, I don't think the narrative is quite there for extreme outperformance. And if there is no extreme outperformance like we've got in the past, will Ethereum be the trigger for alt season? Probably not. And this leads me to my next point. Because of that, this cycle is fundamentally different. Alt season is no longer going to be triggered, in my opinion, by one Ethereum run. And it still could be. Like, based on the data, it hasn't been disproven yet because it's January to May. But I don't think we are going to see this play out exactly. Based on the recent price action, I think instead of being triggered by Ethereum, it's going to be triggered by individual ecosystem catalysts. What do I mean by that? RWA, let's use that as an example. There is a very clear catalyst right now, and that is Trump coming into office, Larry Fink pushing the tokenization agenda, and licenses now opening up in the US for RWA funds. That is a sector which I think will perform well based on a specific ecosystem catalyst. AI is another one. I think the agent and AI space is not going away and will still be one of the top performing sectors this year due to the crazy mindshare, adoption, and development pace that the AI world is currently undergoing. And for that reason, and because of the amount of capital being invested into that space, the amount of attention in that space, I think there is an individual catalyst for that ecosystem. So instead of saying, okay, if Ethereum pumps, every altcoin will go up, I think you have to look at it like there are pockets of outperformance in the market. It could be the Sol ecosystem, it could be RWA, it could be AI, it could be Sui at one point, but these ecosystems will be driving little bubbles throughout the year. Even something like crypto gaming, I could see in the future a crypto gaming bubble crop up at some point because, let's say, off the grid launches, it gets a lot of traction and hype, and a lot of other gaming coins catch a bid. It is a rotators market. It is more of a trading market now than an investors market. Now, that doesn't mean you should just trade. I still firmly believe having a core investment portfolio is really important, especially if you don't have much time. You can just hold a core portfolio and then trade with the rest. But it definitely makes you have to consider a little bit more what assets you're holding. And something I've done is I've cleaned up my long-term portfolio a lot into a more select basket of assets. So these are some of them: Solana, Jupiter, Pepe, ENA, Link, Hype. These are some of my core positions. I have a couple core positions in AI, which also have technical invalidations in case I'm wrong. Virtual, LMT, Mode, AI 16Z and AIXBT I was forced to cut. I'll speak about later because they look weak. RWA, I own a few coins as well, like Checks, like Cpool. So these are some of my longer term assets, right? Not all of them, but that gives you an overview. That's not many coins. I probably listed 10 to 12 coins there. And for the average person that isn't spending hours a day in crypto like me, maybe even 5 to 10 core positions is good. But with the rest of your portfolio, what you can consider doing is trading, or and when I say trading, I don't mean like day trading and scalping, because that's a very individual skill, but just having more technical validations and invalidations for your setups. So let's say gaming starts to move and there's a really strong catalyst on the horizon. If you want to trade the off-the-grid launch, you could play gaming coins based on technicals into that launch. If you want to play a specific ecosystem like RWA, like I just discussed, if you think the next 6 months are going to be really bullish for RWA, yes, you can hold one coin in your long-term portfolio that you believe in, but you can also trade the rest and get exposure to the upside of that narrative. So that doesn't mean you need to become a trader. You just need to be a little bit more open-minded and reframe your thinking that we're going to see pockets of outperformance as opposed to overall altcoin outperformance. There is always going to be opportunity in this market. In the Discord, some people are saying, oh, we're in a bear market now. No, I don't think we're in a bear market. I mean, some altcoins are, but that's not even the right way to think about it, because even if you look back to the bear market in 2022, Bitcoin and the overall crypto market cap technically peaked in November. But we didn't crash until May, April when Luna collapsed. So there was almost 6 months of the phantom DeFi ecosystem. Remember all the Solidly stuff, all the forks. There was insane opportunity to print money if you locked in profits during that period. I did, and I round-tripped a lot. That's a story I've told many times. That was an insane period. I probably made my most gains in Jan, Feb, March after the top was in. Luna entered the top 5 by market cap or top 10 by market cap, I think in March, which is way after the peak. So if you were able to jump on that trade in that ecosystem, there was a lot of money. And if Luna had never collapsed, there's a strong argument to suggest that we never would have gotten that low and we would have continued to see some of these ecosystems bubble. Now, that doesn't mean overall macro bull market, because there were bearish factors like Gensler and rates and macro, which were impacting the market, but it means that you would have had more opportunity to continue to make money. The point I'm making is, even if this is the start of a bear market, I don't think it is, at least on Bitcoin, but even if it was, there's still so much opportunity in the market. Like, there are still going to be trends at 10x. There are still going to be sectors that perform well. It's just not easy mode like 2021. And maybe for some of you, that'll be discouraging. And maybe the views across YouTube are going to drop a little bit because people don't want to put in the work. But, I mean, who's gotten... Unless you've won the lottery, like, who's gotten ridiculously rich and not put in the work? Like, even me, who's made a lot of money through crypto, You know how much work I had to put in learning about DeFi in 2020, getting into Bitcoin and Ethereum in 2019, going through 2021, making and then losing $1 million that year, grinding throughout the bear market, creating content, doing research reports, etc. for like 2 years, and then finally having another crack at it last year. Like that was a 5-year, now 6-year process to get to where I am now and have the skill set that I have now. 6 years of pretty much full time. I mean, during the whole lockdowns in Australia, like I didn't have anything to do but crypto, even in 2020. When normally I'd be working. So I put in a lot of effort to get to where I am today. So I don't even think you need to put in that much effort, just a little bit of effort, especially with all the resources you've got now. Like my whole Discord, for example, is dedicated to these trading resources to actually help you learn. Just a little bit of effort is going to give you a huge leg up and open and expose you to so many opportunities in the market. So even if we don't get that crazy alt season, which I don't think we will, there's still so much money to be made in crypto. But that doesn't fully discount a run on most altcoins at some point. I find funny, like altcoin season. It's like this thing, we're not getting an alt season. It depends on your definition, because the definition of altcoin season is a periodic outperformance in altcoins versus Bitcoin. If that's your definition, we're going to get an alt season at some point. Like we will. That it will happen. When the risk is right, it just might not be for months, and it might only be for a couple of weeks, right? Instead of months and months and months and months and months. And when it does happen, it'll be a few sectors which lead it instead of everything. But there still could be a period where everything decent bounces. There's also this chart, which you've probably seen a lot. Let me get it up now. Where is it? It is this dilution chart. A lot of people are talking about this. This is basically the chart which exhibits the amount of new tokens that are launching. Now, clearly dilution is worse than ever, and clearly it's an issue. But I'm going to take the flip side of the argument. A lot of creators have been using this as a justification for why we're never going to get an alt season or why alts are going to underperform. I look at this chart slightly differently. The first caveat that I have is that this includes all coins. So a lot of these are pump fund coins under 100K market cap, or meme coins that have never been listed on an exchange or gained any traction. If you actually look at the exchange listing numbers, they are a fraction of the exponential growth that this chart is exhibiting in terms of new token launches. So although there still is altcoin dilution on exchanges, there's markedly less versus on-chain. And for that reason, I still don't think altcoin dilution will prevent major altcoins from running. I still think altcoins with the right product market fit, the right community that have enough penetration will perform really, really well, which leads me to believe actually a lot of the outperformers are going to be some of the exchange coins. Obviously, if you can preempt which coins are going to get listed on exchanges, that's a game you can play to make money. But I think a lot of the coins that have already been vetted and are already on the major exchanges, I still think at some point they're going to perform well. The bleed that you're seeing, a lot of it in particular is from the on-chain altcoins which don't have exchanges, because they suffer this, especially on Solana, they suffer this fate of people just rotating from coin to coin on-chain. As I said, the trenches have become very PvP, and Solana and Pump Fund has like ushered in this new era of JEETs who are just trading, which makes sense because you have to do that. But if you know everyone else is doing that, then you're going to start doing that. It becomes this self-fulfilling prophecy, which makes it very, very PvP. If you do want to pause the video now, I've kind of summarized what I've just stated here on this tweet here, which is the reasons why I don't think we're getting a 2021-esque altcoin season ever again. But what can you do? I'm sure some of you are aware of this already. Even if you're hearing about this theory for the first time, what can you actually do? Well, before I spoke a little bit about this, about the trading versus investing split. So that's where I'm going to start here. The first thing you need to do is define your trading versus holding split. What percentage of your portfolio are you actively managing versus holding? This is going to depend on a variety of factors. Your risk tolerance. I think the most important factor is probably time. How much time do you actually have to spend at your computer? How much time do you have to look at invalidations? Because the thing is, tokens invalidate a lot. Like I've had a couple trades in the Discord recently where there were actually very solid opportunities to de-risk certain coins at specific levels, but there was only like a 1-day period or a 12-hour period to catch that. And the coins move fast, especially if they're on-chain. So after that point, you might miss that window. So the more coins you have like that, the more on-chain alts you have, the more time you're going to have to spend on your computer. If you're holding 20 coins, well, managing that actively is going to be very, very, very difficult, because if the market turns, you're suddenly going to have to make decisions across 20 positions. So I think having a core portfolio, which you just hold, is super important. 5 to 10 coins, I honestly think at this stage, I don't really think there's an argument for 20 coins. Like, I would struggle to sit here and fully justify 20 to 30 coins long term. Now, there are so many coins that I can justify as trades. There are so many coins I can justify as midterm holds, and there are beta plays that I can justify as proxies to other coins. But there's a difference. And this distinction's, I think, where a lot of people get lost between those coins which are rotationary, they're trades, and the coins that you're holding and you have a lot of conviction in long term. For me, the real long-term conviction assets are things like Solana, Hyperliquid, ENA I like as an ETH beta, Pepe, I've always held a lot of that, Link, these kind of coins are in the RWA sector. Checks and C pool are my picks. I was in Ondo and Mantra. I have exited most of those positions by now, even though they've been great assets. I almost wish I kept more Mantra, because it's crazy what's happening to that token. I've never seen anything like it. It's honestly insane. So I'm sure some of you, especially the OG viewers, might still even hold some Mantra, because I remember talking about that at 30, 40 cents. I talked about Ondo for the first time at 20 cents. So hopefully some of you hold those coins. I've got some AI holdings as well. But anyway, the point is, that is my core portfolio, which I'm holding longer term, right? When I say I'm holding something longer term, basically what I mean is I'm not like looking for like a quick flip or looking to get all out. I still want exposure because I still think there's upside. But the reason why that portfolio is super limited is because most other coins go through these rotations. And for everything else, pretty much, I want to at least be actively managing it. So actively managing doesn't necessarily mean trading, so quick flipping. But what it does mean is paying attention to the high time frame levels that matter, the indicators that matter. So the moving averages are really important across, like, let's say the daily and weekly. And for an actively managed position, you need to be willing, based on the preset parameters before you buy that coin, to actually de-risk. So I think the mistake a lot of people make is they buy coins, but they don't set their buy and sell plan before they buy a coin. So you'll buy a coin, and so you might be like, oh, I just bought, I don't know, let's pick a random coin, a Hyperliquid. But Hyperliquid starts breaking down, and now you're like, oh, should I sell? Should I de-risk? It's like, well, you shouldn't be asking yourself that, because you should have already written down your de-risk level. When Hyperliquid breaks its technical high time frame, I'll give you an example. Let's look at the charts right now. I'll show you on the actual chart. So let's go to the trading list. Let's look up Hyperliquid. So you could say this, right? When Hyperliquid breaks down, let's say you bought here. You might have bought here. When it breaks the high time frame support, this will be the invalidation. Or on the daily, when it breaks from the daily money noodle, I'll look to de-risk. It's this band that's starting to form here, right? That'll compress over time. If it tucks below like this, I'll look to de-risk and cut 50% there, and I'll cut 50% there. Like, these are certain scenarios that you have to outline. Or when it does a 2x, I'm going to take 50% profits. And obviously you can adjust over time. So your plan can adjust. Like, if it skyrockets much higher, like let's say it goes like this, bang, and this moving average shifts, you might change your level to like the previous all-time high and have this as your new like partial inval, where you might cut 20% and then you might rebuy half of that back at the moving average. Like, it's this sort of stuff in an active position that you have to keep aware of. Now, Hyperliquid for me is not active. It's my longer term portfolio. So these are coins basically that on major pumps I'll sell, on major dips I'll buy, and I'm not doing too much in between. But pretty much everything else that you hold should be, I think, at this stage of the cycle, an active position. The reason I'm saying that is because it's not 2023 anymore. So some of you might be like, oh, Mars, you're flip-flopping. Well, I'm not flip-flopping, because I've been making videos throughout 2022, 2023, all of 2024. That's 3 years, 2.5 years of bear market to bull market. Obviously, as the time shifts, you go from only long-term. Because if you're buying in 2022, your outlook's going to be until 2024 or 2025, which is 2 to 3 years. So by nature, everything you buy is long-term. That mindset starts to shift more and more short-term. Like I showed you before, the tweet that I outlined of my profit-taking plan always had my overall amount of stable coins increasing. Now, the more stables you have, the more liquidity you have to trade. So by increasing your stable balance over time, you're naturally getting that trading focus naturally over time. Now, for some of you, I'm going to say this as well, for some of you that are busy and trading doesn't make sense, cool, you don't need to be a trader. I'm just offering that to people that want to catch these rotations. And I make videos to cater to that audience. But if you don't want to do that, just pick a few assets you like and hold them. I speak about plenty of high conviction assets here on the channel that I think are going to be good plays for, over 6 to 12 months. Yes, you can have a high time frame invalidation, but all you need to do is go onto TradingView, if you want to be really time efficient, you just set a level, set either on, let's say the money noodle or the support band here, set an alert. It'll ping you, you'll get a phone notification. Have alerts on all your major positions. That honestly is alpha. I think a lot of you aren't doing that. Just have alerts so you know when the coin that you have half your net worth in actually breaks down. No, I'm kidding. You obviously shouldn't have half your net worth in a single coin. But if you've got tens of thousands of dollars in coins, don't just look at them and be like, oh, it's broken down. Have the alerts so you know and have a plan for how you interact with those levels. In the Discord, we teach these risk management strategies a lot more. Paradise has a whole section because he's our expert trader. I'm not an expert trader. I just know the concepts of risk management. He has a resources section where he's doing live videos. He's posted a bunch on invalidations, live sessions, using the money noodle, de-risking trade management, market structure, all this stuff we actually have available in the Discord. And we also obviously have our questions channels so you can ask Paradise questions based on charts. If you want to know a good invalidation, and you can actually get trained one-on-one over time to set better invalidations on altcoins. I answer a bunch of questions in my questions channel. You can see here, I answered 20 questions this morning. So I answer every single question that I'm asked. So you actually get one-to-one time with me in the Discord. I mean, occasionally, I'm just being technical here. Occasionally I do miss a few questions, or I won't reply to a question because it's been asked before, but any new fresh question that I think is relevant, I answer, which I think is unique because not many other big YouTubers, I think, are actually interacting with the community daily and answering these questions. And the reason I do that is because I actually want to help you guys succeed and implement these systems, not just give you fish, but also teach you how to fish, because it's a really important part of the game as well. And obviously I try to do that on YouTube, but it's not like I can go through and answer every comment, especially with the amount of spam in the comments these days. It's kind of crazy. Now, the next component beyond the actual active management of your trades are making sure you hold the coins that are in the right sectors. So I discussed RWA a little bit before. This is clearly a sector that I would be focusing on in terms of both holding and trading. A very important thing is when you look at a narrative, ask yourself, what's the longevity of that narrative, right? That will dictate whether something is a long-term hold or a short-term hold. So if my thesis on RWA is that over a 6-month period, it's going to gain more adoption due to the regulatory changes in the US, then that by nature becomes more of a mid to long-term play because the outcome is not expected for many months. Whereas if I'm getting into a gaming rotation based on the launch of something, well, that's naturally going to be a short-term buy the rumor, sell the news play that only might be a month, right? So the outcome is going to dictate the time horizon as well. So not everything's created equally. Not everything is a long-term hold. Everything has nuance. Hyperliquid could be a 1-year hold, but checks might be a 6-month hold. There's nuance, which is why before you buy any coin, you have to state what your time frame is. And that can change, right? Obviously, over time, as things adapt, if it breaks down, you can cut it. If it goes up a lot, you can take profits, but at least have the time frame written down before you actually buy a coin. So RWA is clearly one of the sectors I think is going to do well. It pumped massively yesterday. Many of our RWA coins were up, but I still think it has a lot of potential left in it, especially when assets like Mantra are hitting $10 billion FDVs. This just raises the entire anchor for the whole space. It raises the bar to the upside, which ultimately is going to be a good thing. AI, I think, is another sector that you always need to be paying attention to. I think some of the developments with DeepSeek over the last few days actually acted, even though in the short term things sold off, as a positive tailwind for the AI space. Because what it does is it incentivizes lower cost models with more scalable and profitable business models as a result of that. So if agents become cheaper to use, protocols actually are able to lower their costs, become more profitable, and most importantly for crypto, onboard new users. Because if you can do tasks more efficiently and pay less for it, more users are now going to be able to access this infrastructure, which lowers the cost of onboarding new users in crypto. So for that reason, I'm very bullish on the AI and AI agent space in crypto. As Will Clemente says here, I'm not an AI expert, but seems like DeepSeek's biggest implication is a transition of value accrual from the compute layer, which becomes commoditized over time, to apps/agents built on top, which will now have much lower costs. Now, aside from AI agents, which we'll touch on at the end of the video quickly, I think the biggest beneficiary from the DeepSeek news and the current AI narrative are the decentralized protocols, because there has been a lot of concerns raised about the centralization of some of these models and the privacy. So I think there is a narrative right now around solid open sourced AI solutions, which also benefit from the increasing efficiency and lowering costs of these models. BitTense is actually integrating DeepSeek. So this is an example of a protocol that benefits, which is why we're seeing some positive price action now starting to crop up on Tau. And its mindshare also recently flipped virtual again. Tau, I think, is a solid AI hold long term. I don't think it's a 5x play, but a 2 to 3x, I think, is definitely on the table. And the interesting thing is that we're going to get into later in another video is they're launching EVM smart contracts, which are basically going to allow DeFi on BitTensor. And there are a lot of these applications which are going to be launching. I think there's a massive opportunity given how loyal the Tau community is to actually get into a lot of these plays early. There's already one that I have in mind that I'm going to speak about later, which I'm personally investing in. I think it's going to be launching in a couple of months that I'm really excited about, but that's going to open up an entire ecosystem on Tau. So I think there's going to be lots of opportunities there, so stay tuned for that. I also think if Tau keeps running, there'll be a lot of opportunities in terms of the beta plays. So I do have some positions that are based on Tau subnets. So if Tau runs, I think some of the subnets will really benefit, especially with this EVM narrative for BitTensor. There are a few. Two in particular I want to highlight today. VectorChat's one of them. They're building the chunking subnet on BitTensor subnet number 40. Basically, they are striving to realize the future of life like decentralized AI with their chat token. Basically, what they do is they offer chunking, which is a way for developers to build AI apps much more effective, because developers will be able to essentially build AI applications more accurately with less hallucinations for less cost. So because you can utilize chunking to deploy with no code, I think these solutions, which actually offer developers the ability to create models way more easily and more efficiently, they're going to be in really high demand. And there are a few that are starting to crop up, but the Tau beta, which is VectorChat, I think makes a lot of sense, especially because of how the tokenomics work with these subnets. You can actually see the rewards breakdown here. The daily subnet rewards are $57,359 dollars per day, which is actually crazy. So these subnets are actually quite profitable, and the success of Tau also benefits these subnets. So that's why I think the Tau ecosystem is a little bit different from like AVAX. Because of the mining rewards, these subnets actually benefit. So there actually is value accrual for the whole ecosystem. And that's going to become even bigger once there's more of a wealth effect on Tau through EVM compared to like other networks like, AVAX, which just have these like isolated subnets with their own gas tokens, etc. So, yeah, I think that is a factor that a lot of people are overlooking. If you're interested in the technicals here, there is a clear support as well. So you've got invalidation below. If it makes a lower low, if you want to trade like that, as I discussed before, you could also wait for a flip of the money noodle here on the daily and a confirmation, and then you can have your inval. Just make sure you're using technicals when you're trading these coins. That's pretty much the number one advice I would give for this next period in the market. Just use technicals to your advantage. Doesn't need to be complex. It could just be very simple invalidations, which is going to save you a lot of pain. Because even if you cut an asset, all right, let's say you buy in here, right, and you're forced to cut on a breakdown, fine, you might lose a few percent. It might keep going down, but even if it reclaims, right, you can just get back in again. And eventually, if it explodes, you're going to get your entry. You may have had 1, 2, 3 tries at an entry, but it doesn't really matter because you're only paying a few percent per time. You might lose 20% catching the right entry, but that right entry might take you up 120%, 200%. So limiting downside whilst Maintaining exposure to upside is literally what risk management is. Limit downside, maximize exposure to upside. It's that simple. And the final subnet that I want to discuss today is Neural. So Neural is subnet number 46. They're also interlinked with the gaming narrative, which, as I mentioned before, I think at some point that's going to do well, especially with off the grid launching. So they basically allow end-to-end game creation by utilizing their AI technology. So you can generate in-game assets, generate avatars, characters, model entire worlds. Very cool. They launched Sentios AI, which enables agentic and dynamic worlds to be created. That network is powered by the Neural token, and once again, they also benefit from the TAL ecosystem. You can see here that 2,420 TAL has been deployed into their staking pool since launch. That's more than $1 million to their holders. So real revenue generating protocols. From a technical perspective, although it did break down the momentum gauge here, it has bounced nicely off this previous high, which could also act as invalidation. So I wanted to highlight the chart here. I think I first mentioned it at $6. So although it went up to 18, obviously a lot of you would have taken profits and locked in some gains. We're looking at potential re-entry zones now that it comes down. You could wait to see how it interacts in this level. You could wait to see if it gains some strength and starts to move up like this. But that's completely up to you and how you trade. I'm not going to answer that for you. Just putting it to your attention that I am looking at some of the subnet plays now as beta plays to TAL. I do want to say, though, that TAL isn't the only beneficiary in the market. There are other AI networks which are benefiting from the privacy and decentralized narrative that AI technology has to offer. Out of these networks, one of my favorites right now is Qubic because of their AGI capabilities. We know DeepSeek has created this AGI narrative. Like, are we accelerating further towards it? We know Sam Altman came out and talked about how they're working on AGI. Qubic's a little bit different from other AI protocols because they've actually built from the ground up with real world-leading scientists for AGI specifically, whereas a lot of these other networks, they're not going to be able to natively integrate AGI into Web3. They're Web2 solutions. This is a fully integrated Web3 solution, which I think long-term is a really, really strong narrative for the protocol. If you do look at the technicals, we're in this range right now. So you have range low here, you have range high here. If you are playing, as I said before, the confirmation trade, you could wait, and it kind of looks like it's making a round and bottom here for this push up and a retest, which will also be a flip of the noodle. And then you've got the next range high target, which would be a 90% trade. If not, there's two zones you can look at bidding. The mid-range here with inval below and also range low, which ultimately would be the best entry. Like if you can get range low entry, this would be brilliant. But I don't know if we're getting there. I don't think we will. I think the narrative is strong enough that it's probably going to flip here before it goes down to range low. But those are the two possibilities right now. But it actually obeys structure really well. You have your yearly high, you have your range low, prior range high, and then your mid-range level. And these are the 4 points that you want to look at. And also the money noodle as well on the 3-day and the daily. Also tools that I would use because this has been quite a good momentum gauge. See how it respected the noodle on the way down and then it broke. It respected it on the way up, bounced a couple times and then broke down. So you could wait for a flip and then try and play that next leg up. Just depends how you are trading, but I'll keep you updated in the Discord as I actively make some moves if they do present over the coming days. But I think narrative-wise, Qubic is a pretty strong protocol due to AGI. And all the previously mentioned factors that we discussed with the advancements that we are seeing in the privacy narrative, which is really pushing TAO at the moment. And also, I think DeepSeek has just put another focus on the AI sector again. I do want to quickly talk about agents. I touched on them before, but you might be wondering, Miles, what are you doing with AI agents? I still think agents are going to be a top narrative this year. But, and I've said this before, the thing with AI agents is it's very hard to pinpoint the exact ones which are going to explode long-term because there's so much dilution. So similar to your core portfolio, pick a few that you're holding long-term. There are a few I have in my long-term portfolio. LMT, I already managed to get my initials out on the major pump, which is great because I called it 75 mil, went to 250 mil, almost a 4x. That was an opportunity to de-risk, but I am riding half of that bag long-term still. That's going to be one of my longer-term plays in the agent space. I have virtual. I recently added a position. I do have invalidation, but this is a new position that I added. Let me actually get up the virtual chart now. This was a position that I added during the dip, actually, that I posted in the Discord. And it's actually already up nicely. I bought here, so up 20%, but it was up 40% at one point. But for me, this is one of those in the middle trades where I want to be in this long term, but I have invalidation. Sometimes it's that simple. Like, I like the coin, but I'm not going to bag hold if it starts doing this, right? Why would I hold that? It's looking really good structurally. It came down, tested the money noodle and a horizontal. That's a bid zone for me. I would cut below and I can just ride this up and get exposure to all the upside. So maximizing upside, limiting downside is the theme of this video. So that's one that I took. So I wasn't in a virtual position. Now I am. FAI, I recently added. Jordy is super bullish on that. Still really bullish on that. I'm going to back him. Anon as well is another one that I think is going to do really well, underpinning the DeFi AI ecosystem. It is starting to look a little bit weak, technically speaking. However, it hasn't made a lower low. So I'll show you what I mean. Wait, I'm showing AI16Z, wrong coin. So if you look at the chart here, it actually hasn't made a lower low. So you could actually bid range low and then have inval below. Could actually be an opportunity depending on how it does respond. And then all the other agents, I think, are trades until proven otherwise, because there are going to be so many opportunities. I still don't think the killer AI agent has launched yet. But there are going to be products which I think launch and take the world by storm. You might have noticed I spoke about AI16Z in the past, AIXBT in the past. One thing that I've been clear on with these trades is that they are based on technicals as well. So we had the breakdown on AIXBT. We had the breakdown on AI16Z. I haven't re-entered, so I cut my position for a small loss because I'm waiting to see if they reclaim. I like AI16Z fundamentally, right? I don't really like where it's sitting at technically. So if it can reclaim and get back into a strength pattern, I would be happy to get in on the uptrend. So you'll notice I'm slightly changing the way I'm speaking about coins now versus a few months ago. And it's because exactly what I said earlier in the video, the longer the cycle goes on, the more my mindset shifts from like a long-term holding perspective to a short to mid-term holding perspective. But also, a short-term trade can become a long-term hold. I'll tell you what I mean. Let's say AI16Z flips and you're like, okay, I want to play the quick mean reversion to the money noodle. Let's say it does pump to the money noodle. You take some profits, but it keeps pumping. You can actually just keep riding this, taking profits, and raising your stop up and up and up. And if it keeps going up, you're laddering out over time. And that could go on for 6 months. And it becomes a long-term trade. It never meant to, but you kept making money, so you stayed in the trade. What you want to do, and this is really good advice. If you made it to the end of the video, you deserve this. Let your winners ride. You hear that? Let your winners ride. Cut your losers quick. Let your winners ride. Cut your losers quick. If you do that in crypto, you're going to make a lot of money. I'll see you in the next video. Tomorrow, back to daily uploads. Hopefully you liked the video from the new setup. I'll see you in the next one. Mars High Club in the link in the description below if you want to come be a part of the fam over there. See you later. Peace out.